GDP report came in at 3.3%. In fact, it was a bit stunning to most economists.
It really was. I know I was stunned by it. I mean, you should have seen my surprised face that I made when that came out. A lot of us were expecting it was going to be a bigger slowdown from the third quarter. Third quarter growth was 4.9%, and that was very strong. So we thought that, there's going to be some payback here. Maybe it'll be in the low 2%, but instead you get 3.3% annualized. And when you get into the details, there's even more strength there. And that's, I think, what was most exciting about it is that we've actually saw a positive contribution to growth from residential investment. We know housing has been in this rolling recession along with manufacturing, and maybe the rolling recession could be coming close to an end.
Yeah, and we talk about rolling recession, we're talking about industries, for example, manufacturing with 13 or 14 straight months in a row, and of course housing of what we alluded to. But you look at that, and of course last quarter more than 4% GDP growth. This quarter, at least preliminary, was 3.3%. It might get revised down as we get into it, but either way, it's positive GDP and far away from all of the so-called naysayers who said that we were going to have a recession in 23. Well, that hasn't happened, and so we start to look into 2024 and say, will we eventually have to pay the piper?
That's right. And actually, a lot of the strategists who were predicting a recession in 2023 seem like they're actually just changing the goalposts, moving those a little bit, where it's like, well, we're going to recycle these recessionary fears. Yes, we've got some good momentum now, but it is going to come back to bite us maybe towards the end of 2024. But you can't really count out the U.S. consumer or even U.S. businesses as far as their ability to adapt to what has been a rather challenging environment by design by the Fed. And somewhat the humorous thing about this is the Fed started hiking in March 2022, and most people would have thought it should have been a drag on growth, and it was. That's the rolling recession part as far as the specific industries. But the strength of the consumer continuing to swing from spending on goods towards services has really propped up the economy. And in fact, 2023 growth was faster than 2022 growth. So instead of being a drag on growth, it actually, you saw a growth acceleration.
So let me take the other side of the argument, and I don't mean to be Debbie Downer here. There are a lot of things that we need to pay attention to. One of those is all of the stimulus that was put in, especially fiscal stimulus, is beginning to run out, and we're starting to see that by credit card debt. We saw a report from Discover, and they confirmed that.
That's true, yeah. So Discover Financial, when they reported their results, they noted that credit card delinquencies had increased more than what a lot of people were expecting. Then we also had Visa reporting, and they said that in January, they've already seen a rather dramatic drop in volume of transactions. Now, maybe some of that is weather related. We know the extreme weather, but there are signs that some parts of the consumer segments are beginning to show that fatigue.
And I don't really want to get into politics because, we live in a 50-50 world, but really you talk about a number of those things, and the fact that we have positive GDP is generally good for the incumbent, but at the same time, the incumbent seems to want to step on his toes with what just happened with the natural gas exports.
Yeah, it was a little surprising, and maybe I shouldn't have been surprised by it, but President Biden decided that he was going to stop the development, at least for now, of natural gas export terminals. So one of the great things in the United States over the last few years has been like a renaissance of energy as far as exporting oil and natural gas. And we know that our friends in Europe, they have been heavily dependent on Russian gas. And maybe he was pandering a little bit to his political base, saying that they want to put moratorium on the development of new natural gas terminals. Well, what about the people who were going to build those, that type of investment? And does this actually help our friends in Europe and the Ukraine situation?
And let me point out a couple of things. Number one is we are really the Saudi Arabia of natural gas.
Yes.
We create a lot of it. And if there isn't these terminals to accept this natural gas, Brian, what happens to it?
Well, then basically it gets caught here in the United States.
And they burn it.
Yes, they
just burn it. Yes.
Yeah, so it's they can flare it off.
They flare it exactly
and
right.
that's one of the things that from an environmental perspective, I'm not sure this actually helps the situation, especially if those other countries now become more dependent upon, say, coal. which
Right.
is much dirtier than natural gas.
And speaking of coal users and people who really don't seem to care about the environment, let's talk about China and what they did. They really talked about stimulus.
They did. They've been stepping up the rhetoric, and actually quite literally, first of its kind, the People's Bank of China, the head of it, he came out and said, in 2 weeks, we are going to cut the required reserve ratio for banks. Now, that might sound a little wonky, but basically what it does is it allows banks to lend more money. It's a form of monetary stimulus. It's almost like a supercharged form of cutting interest rates. And he announced that he was going to do it. Usually that type of thing, they just post on their website. That's the way they do it. He really wanted to underscore that they're serious about doing monetary stimulus. You also now have the Chinese government coordinating with state-owned enterprises to actually bring back onshore about $270 to $280 billion in money to help prop up the stock market over there.
And they're propping up their stock market. And at the same time, we're having earnings reports come out right now, and it's every stock for itself. We saw that Tesla did not do well, and it was punished, but there was a number of companies who had better than expected earnings, and they got rewarded.
They did, yeah. Earnings do matter whether or not you beat, and oftentimes it does boil down to the guidance. What are the forecasts that they are giving for 2024 and even the longer term? The Magnificent Seven, and Tesla was one of those. It almost seems like it's now the Magnificent Six, or are they a little bit of a misfit in terms of the Magnificent Seven crowd?